We're learning there, the Bank of England saying that, well, frankly, we're barely going to grow at all this year, next year, 2025. I mean, just a year ago, we had a sort of battle between the would-be prime ministers in the Tory leadership campaign of who's going to bring growth to this country. Well, clearly nobody. I mean, what does the government need to do?
Well, I mean, firstly, we should say that the Bank of England's predictions are basically worthless. I don't really know why people take them so seriously. A year ago, they were predicting the longest recession in 100 years. Now they're saying there's going to be a 50-50 chance of any recession in the next year or so. A 50-50 chance isn't even a prediction worthy of the name. So I don't think you can take the Bank of England terribly seriously about things. They don't seem to know what's going on a great deal. They make mistakes and they overcorrect. That's basically the problem with the Bank of England. The Bank of England needs to focus on doing its job rather than trying to guess whether the economy is going to grow by 0.1% or decline by 0.1%. None of this really matters, quite honestly, compared to getting inflation down. And inflation is going to come down anyway. Inflation went up primarily because the Bank of England printed a great deal of money and then didn't raise interest rates. They're now overcorrecting by shrinking the money supply, arguably too much, and arguably keeping interest rates at too high a level. But at least if inflation goes down below 5%, as the Bank of England expects in last month, in October, and indeed as I expect, we'll finally have interest rates higher than the rate of inflation, which is where they should be.
Will Rishi be proved right when he's predicted and promised, in fact, that inflation will be halved by Christmas? It's on the way.
Yeah, but that was always going to happen.
Yeah.
There's nothing Rishi Sunak could really do about it. The only thing he's attempted to do is constrain public sector pay, which doesn't make a great deal of difference. The primary drivers by far of inflation are how much money is produced by the Bank of England and what the interest rate levels are. That massive splurge of money printing during COVID, the effects of that were always going to fall away within 2 or 3 years. You didn't need to do anything really with the economy other than have interest rates at a reasonably normal level for inflation to go down, certainly by half and possibly a lot lower than that.
Now, the Brexit bashers out there, of course, are using today's news to suggest that it's, of course, down to that historic decision in 2016. But how is the UK performing compared to its neighbours in Europe?
Well, the Eurozone just only yesterday, I think, reported that the economy had shrunk. If they have another quarter like that, then they're going to be in recession. Germany's already in recession. They have got inflation down below 3%, but I think we'll be down to about 3% in a fairly short space of time. The reality is, I mean, it's got really nothing to do with Brexit. The European Central Bank printed a vast amount of money during COVID, as did the USA. They're all seeing the same thing. Inflation goes up, inflation comes down again.
Chris, if you keep raising interest rates and you raise them too high, it kills the economy stone dead. People don't have money in their pockets. So we've got 5.25. We've had that 2 times in a row. Is that a sort of sustainable interest rate? Will the economy, even in some sort of small way, prosper at this level?
Well, historically, that would be a very average interest rate, actually. In fact, it would be on the low side. We haven't had much prosperity in the last 15 years. We've had record low interest rates. So I think on the face of it, having interest rates around about 5%, which is where they would be in a normal market. You've got the Bank of England just disrupting the market here. Who normally would lend money below the rate of inflation? Would you lend somebody £100 at 1% interest if inflation's 10%? No, nobody would. Only the Bank of England does, because it essentially subsidises other lenders. So there's nothing wrong with having interest rates at 5%. It is a problem when you have people massively leveraged with their mortgages, but that's due to house prices being insanely high. I think the Bank of England actually didn't need to raise interest rates above 5%. They can probably afford to lower them over the course of the next 6 to 12 months. But really, I'm afraid to say, people shouldn't be taking out mortgages if they can't afford them when interest rates go to 5%, because 5% is really not that high historically.
I remember back in the sort of Cameron-Osborne era how everyone was utterly fascinated with the amount of government debt. You had those sort of big calculators online with this ever-increasing number spinning by the millisecond. How are we looking today in terms of government debt and borrowing?
Absolutely terrible. I mean, it's well over 2 trillion. I think we're up to 2.4 trillion pounds debt now. It was less than 1 trillion when the government introduced so-called austerity in 2010. And, we're paying the price of that through the enormous amounts of interest we're paying on government debt, and part of that is down to interest rates and indeed to inflation. In fact, it's one of the main reasons we need to get inflation down so that we can reduce the amount we're wasting on all the interest payments on the government debt. So yeah, look, the government has not really had austerity. If you look at the amount of public borrowing, Jeremy Hunt is borrowing about as much as he can without spooking the bond markets in the way that Liz Truss did. But everyone's maxing out the credit card and has been for the last 20 years.